Alrighty, hey traders, hey traders, hey traders, hey traders. Welcome to today's session. Bam. We're going to be focusing on the bigger picture. Ball. We're going to be focusing on the bigger picture today, guys, about what's going on with these markets and all that sort of stuff. And the reason why it's so important to keep an eye on that bigger picture. Before I start with this, guys, let me get straight into today's session. And let's do this here right now. Alrighty, guys, let me bring up the typical disclaimer. I'm going to get started into the session. Hey, traders, welcome to today's session. Do not place a trade based on this trading session today because trading is risky and it can cause substantial financial loss. There is no guarantees of making money in the markets, and trading is a hard thing to do if you're not following a good, strict plan. And so this is just general advice only. I'm not telling you to buy and sell anything. Alrighty. So that's out of the way. Let me now get started, guys, into what I want to talk about here. And before I do start, guys, if you haven't done so yet, then bam. If you'd like a private one-on-one coaching call with me, you can book that. Or if you'd like to get a free trial to the Master Trader Lab, you can get that as well too. Let's actually get straight into this now, guys. One of the biggest things that's important to understand is that bigger picture okay? That longer term chart. Because those longer term charts are giving us a bit of a gauge, a bit of a guide on what's really going on in these markets, right? So the reason why I say that is because that higher time frame is really what we call the king, right? So looking at the daily chart, we always got to look at the weekly chart. So remember, the market is like the market is like an elastic band. Okay, so if I bring up, say, let me bring up this here. Okay, think about this for a minute. Okay, if we look at the weekly chart, let's say for the weekly chart, this is the weekly chart over here, weekly here, and this is the daily over here. All right, and if the weekly has been doing this, right, up, 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 sideways, up, up, and up. Okay, so we see that on the weekly chart. We see this on the weekly chart. Now, let me take a step back. How does the market work? It goes for a run, has a pullback, goes for a run, has a pullback, goes for a run, has a pullback, right? So it has pullbacks. But if we're looking at this weekly chart, but then suddenly on this daily chart, this is what the daily chart looks like, right? Oh. Right? This is what the daily chart looks like. Let me say I had that there. So this is what the daily chart looks like here. Now we're looking at all this. This is the daily chart here. This is what we call the small time frame, right? This is looking at small picture, big picture over here. Small picture, big picture. Small picture, big picture. Small picture, big picture. Okay. And what we're looking at here is we're looking at the small picture, which is the daily chart. But if you have if you're looking at the daily chart, but you're not looking at the weekly chart, you're missing half the piece. Because if the weekly chart has been going up for quite some time, then what are we expecting? How does the market work? It's not like what we're expecting. We're expecting what? Some sort of a pullback, or at least some sort of a sideways movement. So this is where, whenever you're trading, always look at that higher time frame and say, okay, where are we in the bigger picture of things? Where are we in those higher time frames? Because if we've been going up for quite some time, and I just finished off an amazing coaching session with my traders. I'm so proud of my traders. I'm so proud of all my traders. They're absolutely kicking butt. They're trading really well. They're doing really well. I have one coaching client named Paul. He's only been with me for 4 months, and he's absolutely crushing it. He's doing really well, and I'm so proud of him. Yeah, as I normally do a weekly. I normally have a weekly coaching session with them. It's a live coaching session. Where I help them, and then also I turn their microphone on, and then we can have a chat, and I can help them one-on-one. Just phenomenal. They're doing so well, and I'm just so proud of my my private coaching group. They're learning the system, they're being patient, and they just know, right, this system works. And so I'm so proud of them all. So by looking at this here, right, if you're looking at that weekly chart, what is that focused on? That is focused on what? That is focused on that we went for a nice big run, and then now we're having some sort of a pullback, right? Some sort of a pullback through here in the markets. right? So if the weekly chart has been going up for quite some time, remember, this is how the markets work. It goes for a run, then it has a pullback, goes for a run, pullback. And so that's why it's always important to keep an eye on that bigger picture to see where are we in the cycle of things. I'm not talking Ray Dalio cycles, but where are we in the cycle of things? But then also, what could we start to expect maybe depending on what this longer term chart is saying? So if we go and have a look at, let's bring up the gold, for example, here for a minute, okay? And I'm going to bring up the gold weekly chart. If we have a look at the gold weekly chart, what has happened through here? Right, we had a big drop down, and now we've had a nice big drop, a nice big run back up through here. All right, and we're getting some sort of a pullback through here. And some people have been saying, "Yay, we're getting a pullback. I'm buying it." And then some people saying, "Yay, I shorted it, and I'm the king." Yippee doo day. But the thing is, like, when we're looking at this here, can you see how we've had this big strong run down and a big strong run back up? So by looking at this here, what were we expecting? What we're expecting as this market was rolling up? A pullback. Now, we don't know when or if the pullback, when the pullback's going to happen, right? You never know when it's going to happen exactly. But as the market gets a bit too extended, then you're like, now how far is too far? Well, if you use a simple moving average, right? I just look at this here. This is just a 20 moving average on this chart. And you use a 20 moving average, and you'll notice what? You'll notice that the gold only gets a certain distance away from the moving average before we get what? A pullback to it, a pullback to it, a pullback to it. So this is called time and price. When the market gets too far away from the moving average, we have a pullback to it. Too far away, pullback to it. Too far away, pullback to it. Right? It's always the medium of what the market's doing. Now, you could use any moving average. Doesn't matter. But 20, 50, doesn't matter. You could just use it, and then you can look over time. So, okay, look how far we are from this. And so we can see, right, from where we are right now, like, again, you never know exactly when the pullback's going to be, and you never know exactly how long that continuation, right? Because we could get in a bit more of a bubble territory, and it could just keep going on for quite some time. Right. So when we're looking at this chart here, we can see what we can see. We had this big run up and a big run down. So looking at this here, we had strong sellers move down through here, big strong sellers. And then now we had this big strong buying move. What does that mean? We had strong buyers, strong sellers, strong buyers. So by looking at this, firstly, we actually have X marks the spot. This is the trend lines here that I was putting on. Isn't it interesting that happened today? That this is the daily chart over here. Look where it stopped right on that trend line. Coincidence? I think not. But looking at that there, right, now I can see, okay, that even if we do get a bit more of a pullback, that we could expect possibly even a 50 to possibly even a 60% pullback, which goes in line of this actual low down here, doesn't it? You can see this whole area through here, isn't it? This from, actually, if I delete that, you can see from this point through here to this point through here, that whole area through there is an overall significant support level. So if we do continue down a little bit more, we could find a bit of support, and then what? And then it's just like, and then we could get because we had these strong buyers, and then we have this pullback, we could get a bit of a strong buyers, get some sort of a bounce here, and create what? Create a higher low, and then that could be the continuation, and then we finally break up out of this here. So one, we can see we had this big, strong move up. So we had strong buyers. Now, what are we expecting? We're expecting some sort of a pullback. Now, the pullback here, because we had these strong buyers, right? The pullback here is likely to be 50 or 60%, maybe less, right? Maybe it's just going to go sideways for a while, maybe less. And then that's what we're seeing through there. So if we go back to a daily chart, we now know, even if it breaks this level through here, this whole area on this daily chart, that's now a major area of support on the higher time frame that we could possibly get some sort of a major higher low on this weekly chart, and then now a continuation up. Because remember, if we get a big, strong buying move, then we could expect some sort of a weaker pullback, strong buyers, weak sellers, and then therefore higher low, and then a break out of this thing. Same for the silver market, right? We saw this just recently on the silver market. Same for the silver market here, right? We had this big move down through here, and you can see that, yes, we had a rally. What are we expecting? Some sort of a pullback, but you can see how these major areas of resistance have been you know, have been what's the word for it? Has been there at this major level of resistance, and that's where it's at right now. So you can see that on the charts there, right? You can see how that this weekly chart, if you don't know, reading that higher time frame chart, have we been going up for quite some time? Are we at major levels of support and resistance? And if so, where are we at? Is a big defining factor, right? In reading those time frames. So when we're looking at, say, the Dow Jones right now, if I look at the Dow Jones and I bring this up here, what is this saying? First, we had this move down, and then we had this nice move up. Look at this here. We're starting to what? We're starting to change momentum, aren't we? Notice how this looks like it's going to be the very first lower close on the weekly chart, which could mean what? A short-term momentum change. Short-term momentum. Now, it hasn't closed on the weekly chart yet, but even if we do get a pullback, because we had these strong buyers, we could get what? We could get some sort of get some sort of easy, Tiger. Wrong one. We could just get what? Just some sort of a 50 to 62% pullback, and it just be a normal thing in the markets, right? From there to there. Right? In an overall market through here. Yeah. Because remember, we actually had, now that's actually a pretty big pullback through there. But as you can see, right, we had this big run up through here. So we could get that sort of it, and that be still okay with a pullback. Now again, it's a pretty deep. If I go back to this daily chart, right, that's a pretty deep pullback, and it may not happen because remember, it doesn't actually have to pull back 50 to 62% level. It could actually retrace to what? Let's actually bring this up here. It could retrace to even just the 30%, which is that level there. Bam, right, which is that level there, and then we could start to see a movement up. So we could even just get a 30% retracement. But we are likely to get some sort of a retracement. Why? Once again, look at my long-term moving average. Let me bring this up through here. Look at my long-term moving average here. How far do we get away from the moving average before we get some sort of a pullback? Now, a pullback could mean a pullback towards the moving average. When you're using this technique, guys, it's basically time and price. When the market's too far away, we know it's likely to come back to it. Too far away, likely to come back to it. Too far away, likely to come back to it. And so that's what we're talking about here, right? That's how that's what we're talking about here is how to handle that there in the markets there. So that's what we're seeing there on the Dow Jones. Same for the S&P 500. What are we seeing there? We're just seeing what? We're just seeing a nice big move up. We've got this where we are right now, this level through here. But if we just take this off here and just read the market, we had this move down and a nice move up. What are we seeing here? So now, because we've been going up for quite some time, we could expect some sort of a pullback. Now, is it going to pull back right now? No one knows. Oh, John, you're an idiot. You don't know. You don't know where it's going to go. Oh, I'm going to go find someone who does. Good luck with that. And if anyone says they definitely know what's going to happen tomorrow, run for the hills. So we could get some sort of a pullback. And as you can see, right, that this 50, 30, 30%, 50%, and the 62% are definitely levels of where we could actually get some sort of a pullback. Now, does the pullback mean we have changed the overall trend? No. No. It just means it's just a pullback in the markets, right, at that time. And if we do get that pullback, right, at that time. Because remember, just like gold, right, just like gold, we could get a move down through to here, and then we hold, and then ultimately do this, and then ultimately start to do this and break back up and start to break up to new highs. Oh, John, that's not going to happen. You know, this is, guys, no one knows what's definitely going to happen. We can only flow with the market, okay? Please throw your ego out the window of what you think is going to happen. No one knows definitely what's going to happen, right? We may not even get a pullback here. We may just go sideways. We may continue up for a little bit longer. We don't know. All we're doing right now is using what we have in front of us as tools and guidance to help us get a good advantage of what's going on in the markets right now. So again, looking at the bigger picture on what we're seeing through there, right? Looking at the bigger picture and seeing through there. So now we can see what's happening here. So we haven't actually got any short-term momentum change yet. It looks like it's starting to get a bit top heavy. So I actually am top heavy means where we are right now. So I actually am expecting some sort of a pullback to happen soon because of where we are right now, right? We're just getting pretty top heavy where we are right now. So even a pullback to the 52 moving average, which is actually this support level here, the 2650, that even if it does get a pullback to that, does that mean the trend has changed? No, because we could just get a pullback to here and then we just go straight back up again and then we break up to new highs. Right? That's what could happen in the markets. We don't know. Right? We don't know. So that's what we're seeing through there in that there, and same for the Nasdaq as well too. Right? Remember, just looking at the last leg in the markets, the last leg in the markets. Now, yes, some people do say, well, some people do say that this is the Nasdaq through here, and we could be forming some sort of head and shoulder formation. And you know what? When we squeeze it up, that's actually what it could be forming. Right? That's what it could be forming. And so when we're looking at that, when we're looking at that, then you know that's a possibility, but we can't say that. Okay. So that's basically what's happening there right now. Okay, so we have this move up, and then a move down, and then we had a move up. So by looking at this here, again, this strong move up, does this mean it's been an end of trend? It's actually different on the Nasdaq, isn't it? Because we had this move down, and if we go from the ultimate high to the low, we can see how it definitely did break above the 60% level, didn't it? Definitely did break above that, but now we're just breaking above it. So the Nasdaq, actually, the tech stocks out of everything actually looks the weakest, right? Because where we're at right now, so we're just breaking above this 60% level. So this actually could be some sort of a right shoulder here if it does start to form in the bigger picture things, and then we start to roll over and go down and blah, 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 all that sort of stuff, right? But we don't know that's definitely going to happen, and we take it one day at a time and also 1 week at a time. So by looking at this chart here and by looking at this here, we could actually expect what? We could expect some sort of a pullback, and if we do get the pullback, what's likely to happen here? Let's bring up this weekly chart again. From here to here. Right, from here to here, and then all these levels through here are likely to be some sort of support level. So that's where we're at. That's where we're at. That sort of bit of a junction there in the markets, and same for the Nasdaq as well. Sorry, same for the daily chart as well too. So we haven't got any. When we're talking about short-term change in momentum, we haven't got any short-term change in momentum yet. Looks like we could quite possibly getting close to that on the Nasdaq. The Dow Jones is the one that's actually looking a lot weaker in the markets right now, but we definitely didn't get any strong momentum close. And the same for the S&P 500 as well too, right? We're definitely starting to slow through here. What I mean by that is you can see the last week, right? It's just been not really moving much. So the class today is based on looking at the bigger picture and seeing where we're at right now. So once again on the S&P, you are expecting some sort of a pullback because we've been going up for quite some time. So therefore, that's how the markets work. We go up for quite some time, then we have a pullback or a sideways movement for a while, and then up and then sideways and so on and so forth. So, so that's basically what I wanted to share with you today, guys. If you have any questions, guys, then please put them in the chat box and I'll be happy to help you out. Hey, James. Rav, John, bearish engulfing, need a follow through tomorrow. Once we take out the 21st lows, we should have the sell-off I've been waiting for. The sell-off you've been waiting for. You may be right in waiting for the sell-off. Again, and the thing is, the thing about this is that, yeah, I do believe we're likely to get a bit of sell-off, but it hasn't got that yet. So we could actually even hold and just continue up from here. That's always a possibility. As we went up, so did the margin call. Rav, I think you're pulling out strings there, my man. Just because we went up doesn't mean that there was margin calls on the upside. So that's basically, yeah. They're there may not be margin calls on the upside. In fact, if the market's going up, there pretty much is no margin calls because margin calls are generally just based on stocks. Margin calls is based most of the time anyway, is based on people buying stocks, on margin. That's basically what happens. So if the market's going up, there's generally no margin calls. It's only when the market starts selling off that margin calls start to happen. I think if John were president instead of Trump, things would go much better, and the S&P would already be at 3,600. Man, I couldn't be president. I'd suck at that job. Right? I'd suck at that job big time. I have no PYPL. Lane, you trying to pick a top again? You're trying to pick a top in the markets? Looks like the moving average is making head and shoulder. John, why do you not pay attention to data? Terrible economic data in the US. Also, recession indicators are all red in the Europe. US ounce unemployed, rates hit, blah, 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 blah. You know why, Rav? It's because they mean nothing to what the market is likely to do tomorrow or the next day or the next day. Because you're using big fundamental data to be a short-term trader. That makes no sense at all. Using big economic data to do that. Now, by the way, the last couple of years, Rav, things have been bad underneath the surface for quite some time. But the market's going to do what it's going to do. Just because terrible economics has been terrible, they've been saying that for many years, Rav. So don't ever take a number or a big economic data number and then start to try to short-term trade the markets, because that's just not how it works. Remember, if you guys remember this is such a big thing. Remember, okay? We know there's manipulation and all. We know that there's manipulation in the markets and all that sort of stuff happening in the markets. Okay, we know there's a lot of things happening in the markets. Here's the thing, right? If you watch The Big Short, we know, right? We know The Big Short. What was happening? That the credit rating agencies that were marking these bonds, right, AAA, they were getting paid to keep those AAA, even though that they weren't, and the market should be going down, and it wasn't, and blah 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 blah, all this sort of stuff. The big thing about that is that if we are likely to form some sort of a top, it doesn't mean that it's going to go straight down. We may get a couple of down days, and then it might go up for another week or two. So that's where you've got to really, your analysis needs to be in line with the way you trade. If you're saying really bad economic data equals the market going to crash, so therefore I'm going to short it, and then the market goes up 2 days and now you're freaking out, that makes no sense at all. Because you're using a big economic data and you think that's going to be the thing that's going to send this market through the floor. Big, big, big mistake. Big mistake. Why? Because through 2015, 2016, what was everyone saying? Bad economic data. Deutsche Bank is going to go under, right? Jubilee year. The debt has exploded. All this sort of stuff in the markets, right? We're hearing that all over the place. And what did the market do? Just went up. Went for a big run. So that's why it's so important, guys. Like, because I'm a trader of the markets. I'm not an investor. I trade. So the most important thing to me is what's happening in the market right now. I can't trade terrible economics, because even if there's terrible economics, guess what? We're still going to get pullbacks. We're still going to get swings. We're still going to get all that sort of stuff. It doesn't mean just because we have terrible economic data now, doesn't mean that the market's going to do what you think it's going to do. Like, for example, a lot of people think, right, if we go to war, that's going to be very, very, very bearish for the markets. Go back in history and look at when we actually did go to war. What did the stock market do? It was actually the bottom of the markets. Look what happened, right? Look what happened when the government actually shut down. Right? Look what actually happened. Look what actually happened when the government shut down. That was actually bullish for the market. People think government shut down, that's it, it's all over. That was actually bullish for the markets. So you can never say, you can never use that sort of stuff. So because remember that and if again you go back to Big Short, when did he start noticing that things are starting to crumble? I think it was 2005, right? 2005 and 2006. He started noticing things in the property market starting to crumble. That was the data. When did all that stuff about the data, about the banks and all that sort of stuff, when did it really affect the market? September, October, November 2008. When did the market start to step down? At the start of 2008. But it went for a nice run in 2006 and 2007, even though the data was saying this is shit. So it's really, really, really important your analysis needs to be in line with the way you trade. The analysis needs to be in line with the way you trade. And that's this way of saying, because like if you're short in the market right now, and then suddenly it goes up for 2 days and you're freaking out, like, hang on a minute, you can't make a decision based on some number that came out of the markets and then short it today because think it's going to tank the markets. That's not a long-term successful strategy. That's based on think or hope. Because again, guys, we've had the market is always right. And what I'm looking at the market right now, we've had a big, strong rally up. That simply means that could be the precursor to a short-term pullback before an all-time new highs. That's a possibility, guys. Every time you think something cannot happen, especially in the markets, it's likely to happen. Really, 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 really important. It's likely to happen. So we are in a recession. Atlanta Fed is hawkish. Okay. Blah, 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 blah. Data was good. Okay. I didn't short until late October. I didn't short until late October. Okay. And then closed too early on the 20th of December. Okay. Okay. Well, the thing is this, is that by looking at these markets right now, there is nothing here telling us that we're likely to go down. Remember, the market's always right. And the other thing we have right now, remember, we trade the data, we trade the actual price. We don't trade, economic data. Economic data takes time for things to unfold. It takes time. John, do you think that with efficient strategy and risk management, day trading should be easier than swing trading? Better risk control, etc. 30-minute move than a 30-day move? Bo, that's actually a good question you ask. You don't want to be looking. It's so important to. For me personally, I don't class myself as a swing trader, a day trader, or anything. What I class myself is a trader. So if I'm trading the markets and I see a really good setup on the 2-minute chart and everything looks good, well, I'm going to take that and I'm probably going to be in it for maybe 15 minutes, maybe for a couple of hours. I don't know. But if I get the exact same setup on a weekly chart and it's a beautiful setup, you better believe I'm going to take that and I'm probably going to be in it for a few months. So do you see what I'm saying there, bro? Like, you don't want to restrict yourself to, I'm this type of trader. I just say, where is the setup and how do I benefit from that? If I'm on a daily chart, then hey, the thing is this is that if I get a trade on a daily chart but the charts are telling me to stay in because this is still has strong momentum on the upside. Well, I'm not going to get out because I'm a scalper or I'm a short-term trader. I'm a day trader. I'm going to stay in. I'm going to stay in it until the market starts to show momentum change, and then I'm going to get out. So I never limit myself to any particular type of trader. I have my trading setup that works on all markets and all time frames, and then once I'm in, then I'm just looking to maximize my profit. Sometimes it's a small profit because that's all the trade was, and sometimes it's going to be a very nice runner. You just never know upfront from that. No problem, bro. No problem. I get it, man. I'm just telling you this, so I want to see how it develops and how traders like you see it. No problem, Rav. No problem. The thing is, Rav, is that, you know, for so many years, right? And like, even before the election, 2015, 2016, what was all the data? The data was Deutsche Bank is going to go under, the debt's exploding, they can't keep it up, and all this sort of stuff, right? It was just all over the place. And you can spin it which way, whatever you want to. The most important thing is that if the market's going to start to roll over, it will tell you it's going to start rolling over. And what do I mean by that? If we bring up, say, the Dow Jones here for a minute, right? And I'm going to bring up, say, my weekly chart here. Actually, no, let me bring up, say, the 60-minute chart. The 6-day chart here for a minute. And I'm going to go back to 2008, right? The market will tell you when we're likely to start to see some rollover. So let's go down to, say, a 7-day. All right, so this is 2008. What do we have here in 2008? It really does come back down to this simple. What is it? This is a higher low, higher low, a higher low, a higher high. Then it came down, made a lower low. We had a nice rally, lower high, and then the market broke this low, and then we're in a lower high. So we're in a downward trend now. Notice how we had this high up here, and then we had a definite, this is called a what? This is called a bear market rally or a bear market pullback. This is 2008 here, guys. The market was telling us we can't preempt when the market is going to go down, but the market was saying, oh, look, we've just created a lower low. Now we're rallying back up. This is the weekly chart here. And what is this? This is a what? As I said before, what is this? This is a, oh, look, a 50% pullback. And then the market continued down. What does that mean? This is a strong bear market rally, meaning strong, meaning we had a nice bear. This is definitely a bear market rally because we created a lower low. And then as soon as we did that, as soon as we started to roll over, it created a lower high through here. Then that's what started the overall downward trend. Then we had what? Then we had this low through here. We had this lower high. We had this low. Then we had this higher high. Oh, look, this was the very first what? Higher high we had. And then what? Breaking through all this significant resistance. Oh, what does that mean? Change in trend. Major higher high, higher low, higher low, higher low, and major higher low. So I hope you guys can see what I'm saying here, right? We can never predict what's going to happen, but when we start to look at the market, as we're seeing right now, what we got over here in 2008 was what? Just a big rally down, and then what? We had a nice 50% pullback, which is strong, and then we continue down. What do we get in the market? What have we got in the market today? Big rally down and a big rally back up. That is not a bear market rally. That is not a bear market rally. This over here in 2008 is a bear market rally, and because it failed at 50%, and then the weekly chart started to roll over. That's when everything started to change. And as you can see here, right, if we continue on now, and let's actually continue on moving forward through here, what do we have through here? We have what? We have sideways. You probably could call this a higher low, some sort of higher low through here. This was pretty much an equal low through there. Came back up. Look at this here, right? Came back up, pretty much created a what? An equal high, double bottom. Then look what happened. Oh, sorry. Came up through here, created a higher high, created a higher low, breaking through previous highs, and away we go. Was there any definite strong bear market rally, meaning a 50% pullback followed by a lower high and breaking past previous lows? Absolutely not. And the market continued up. So where we are right now is not the definition of a topping pattern right now. It may form out to be that. But we've rallied up almost 100% of the down move. We've rallied up almost 100% of the down move. So I hope you can see what I'm saying there. And that's the reason why you got to listen to the charts. The charts will tell you when we're starting to roll over. The charts will tell you, okay, now we're rolling over. Don't try and pick a top and think the market's going to start to crash now, because you're going to get a big, 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 big X mark 9 times out of 10. You will not see the banks go bankrupt yet. They are contained at this moment through mergers and cutters. 2008 is a little different than today. This is a bigger bubble. Yes, if that's true, the market will create what? The market will create a lower high, a lower low, and then it'll start to create a lower high, and then we'll start to see a run down. Now, yes, it's possible that right now is creating some sort of right shoulder, and we do start to rally down. But until we start to get at least a momentum change, trying to short this market right now is very, very risky. Very, very, very risky. Well, Ray Dalio stuff is big picture stuff. Ray Dalio stuff is big picture stuff. Remember, it's big picture, big picture, big picture. It's what's likely to happen in the next couple of years. Doesn't mean it's going to happen today and so on and so forth. So I hope you can see, guys, what I'm saying there about the markets. Even though 2008 was different, the markets are the same. The markets are the same. Right? And so the more time you look at that, the more time you'll realize that. All right, cool. All right, guys. Well, that's it for me today. If you haven't done so yet, guys, if you'd like to get my help or get access to a coaching session with me or the Master Trader Lab, then just go to mastertraderlab.com, or you can go have a coaching call with me, or go to John's flash sale to get the flash sale with the trading course as well too. So, all right, guys, that's it for me today. Have a great day, and I will catch you guys next time.